Uh-oh, you know it's serious when I put on my glasses. Plus, we're blowing out the rest of the commercial breaks because we have the markets not necessarily down so much, but coming up off the floor rather impressively. Yes, the Dow is still down 278 points, but we have sliced nearly 220 points off the lows of the session for the Dow. What is helping the markets recover in these final 8 minutes of trade? Let's bring back our traders in the floor show, Alan Nuckman and Phil Flynn. Let's get right to it. We also have Bill Studebaker of Robo Global with $1.8 billion in assets, and Jeff Kravitz, regional investment strategist at U.S. Bank Corp with about $181 billion in assets. First, I want to get to Phil. The comeback is pretty impressive, is it not? Even though there's red on the screen, we want to put this in perspective.
It really is. I mean, you know, when we saw that report today by President Trump pushing the trade deal out past the election into 2020, it freaked people out. That's why you saw the fear index go up. That's why you saw the bonds make a huge move up 3 points. But, you know, people are starting to realize that these comments don't really mean anything. And I think people realize they've overreacted. In fact, I was just looking at the S&P board here. Right now, we're seeing a surge of buy orders coming in. People are looking at this as a buying opportunity. If there were names on the board that you like, this is the time to buy in, and we're starting to see that happen into the close. I think you have to put this in perspective. Right now, when we look at what's happened today, right, trade war negotiations, we're over in NATO. You know, we're talking about new sanctions on Brazil. We're talking about new sanctions. There's a lot of uncertainty, and most of the traders just assumed that the tariffs that were going to go into place on December 15th weren't going to happen because President Trump wanted to make a deal. Now he's saying, hey, wait, I don't need to make a deal, but that's what he's been saying all the time. It's either going to be a good deal or no deal. You know, and he's just telling the Chinese, hey, December 15th is around the corner, and if you don't want to make a deal, I'm willing to put it off past the election.
Bill, Phil just said that we're seeing a surge of buy orders. For a guy like you, you have to tell us what you're doing on a day where at one point we were down much more. We were down more than 450 points. So that was a buying opportunity for people like you. What were you doing?
Well, we definitely are buyers. I mean, I think that when you sit back and you look at where the world's going, we're ushering in a period of unprecedented innovation and prosperity as we go forward. And I think investors have a lot to be thankful for as they look at the markets, right, advancing new highs in November, despite the fact that most strategists and even market participants are sort of watching dismay how the markets keep going up. And I think a lot of this has to do certainly with the positioning that's at hand that investors have got wrong, and active managers have struggled because why? People sell what works, they sell what doesn't work, and they're stuck with the lackluster performers in the middle. But as I look out into what's happening in the world in automation, I think the direction is way up in the right. So I'm pretty excited.
Okay. Alan, are you seeing the same thing that Phil is seeing on the floor of the CME where you're watching the situation? Right. Because we just showed the 10-year yield, and it is falling back down. Now, remember, the floor going into today was 1.71% for that yield. Folks, when the yield starts to fall, that is a flight to safety. Already we're down 11.9 basis points as we head into these final couple of minutes. What do you make of that?
Well, that's the old school indicator. That's what we used to look at for money flow when people were scared to see how the bonds reacted when you see stocks sell off.
Not anymore?
Used to, back in the day. Now there's the we call the VIX.
Yeah.
So we look at the VIX. The VIX was up to 18 at one point earlier today. It's back to the 16 level. So it's taken a lot of that off. Now the VIX gave us a caution sign last week. Even though the market made new all-time forever highs on Wednesday, the VIX was not even near its annual lows. So and the S&P at that point was 150 or 200 points higher than it was back in April when we saw that VIX low. So that was a little bit of caution. Let's see where we are in the next couple of sessions, because we get these mini VIX explosions. You talked about a 50% jump in the last few sessions. Then let's see how the market settles out. And every time, as we've seen in the past, the VIX comes back down and the stock market goes back up. So it's been a buy a dip market forever now.
Jeff Kravitz, you've got a beast of a business over there at U.S. Bank, over at Wealth Management, that division. Tell me what the wealthy are doing with their money right now, because each day there's a different headline. Phil is right. You got to tune it out, because the president on one day says, oh, we want a deal. We'll see what happens. The we'll see what happens is basically the consistency here. So what do you, as somebody who's really in charge of so much money, do?
Well, what we're telling our clients is to stay focused on the long term and really the fundamentals. And what's really moving markets is the economy. the Fed, the consumer. Those are the things that we're focused on. And of course, every day, week to week, you see short-term volatility with trade news, but that's in our mind just a distraction. So you've got a very resilient consumer. You've got good economic numbers. So that sets us up for a move upward. And we're not too concerned about the short-term volatility with regard to trade.
I get that. I get that. So what areas look good to somebody like you, Jeff? Because look, insurance names are down. European banks are down. Big U.S. financials are down. I'm looking at my stock charts here. Tech is mixed, interestingly enough, but all the oil names that we follow are all struggling at this moment. What looks good to somebody like you?
The areas that we like are areas that are benefiting from the evolving economy, really cloud computing, artificial intelligence, things like that. And that would be technology, especially software. Also, there's innovation when it comes to healthcare. So those are areas which we really like and which should continue to do well as long as consumers and businesses are still spending and upgrading their platforms.
So why does oil look so ugly? Drillers are down. And again, as I said, I'm looking at everything from ExxonMobil to CVX and, VLO. Everything looks really ugly. Occidental Petroleum. What's going on?
Well, when you look at the energy complex, energy is really a comment on global growth. And when you get trade fears, it does affect the energy complex because there's a fear that there's going to be a slowdown globally in trade and economic development, and that hurts energy, especially emerging markets, places overseas in Asia.
Phil Flynn, why do you think that's happening? Because right now, with the Dow Jones Industrials down 267 points, ExxonMobil and Chevron, of course, are the two big names on the Dow, but we also have many in the S&P as well. Is this one of these cases where at the end of the year, it hasn't been a big sector star, so you might want to start nibbling around the edges here?
If that's to me, absolutely.
Yes, Phil Flynn.
And this is a sector that nobody has loved for the last year and a half, and I think for all the wrong reasons, right? And what's going on right now with the oil market, there's so much focus on U.S. oil production being at a record high, like 12.6 million barrels a day. They think that's going to be enough to supply the entire globe.
Okay.
It isn't, okay? We have some issues right now where going into the end of the year, new regulations could really drive this market, and if the economy doesn't slow down, it could rally.
Jeff Kravitz, you get the last word. No panic, right? You like buying stocks at this very moment.
No panic. No, we're keeping our long-term asset allocations with clients. We are definitely focused on U.S. stocks over international stocks. On bonds, we like